Hello everyone, welcome to this channel. This is your dear trader Aravind Srinivasan. If this is your first time in this channel, I highly recommend you to subscribe to the channel right away, because as a team, our purpose through this channel is to make your learning curve as a trader as short as possible, and also to make this easier for you as a trader. Like I mentioned in my previous video, most of the content in this channel are going to be absolutely beginner friendly, at least in the initial stages. And if you find this video either too slow or too fast, please feel free to set the video to pace up to yourself. And when I talk about basics, have you ever encountered a situation wherein you are watching the news, or you're looking at a tweet, or you're scrolling through Instagram, or you're even listening to your friends converse about the stock market? You are really interested in listening to it or reading it, but you still seem to don't understand what's happening. It all sounds too fancy and too complicated for you to understand. Has that ever happened to you? If that has happened to you, I recommend you to watch this video till the end, because the primary reason why we don't understand when people talk about the stock market is because we don't understand the terms or the terminologies that they use in describing what's happening or in communicating about the stock market. So that is exactly what we're going to be looking at in this video. Let's learn the terminologies involved in the stock market. Now, one of the first things that I wanted to understand when I started my journey is, what is the difference between a stock and a share? So basically, stock is a generic term which comprises of multiple shares, whereas a share is a very particular term that is used to define a unit of the company's assets. A stock can be of different values, as in, say you and I both have stocks. You have 5 shares of TCS, say 10 shares of IOB, and I have 6 shares of Reliance and 4 shares of Tata Steel. Both of us have stock, but then the value of my stocks would be different from your stocks. But when you consider a share, on the other hand, every single share would have the same intrinsic value at any given point of time. Meaning, if you are holding 5 shares of Reliance and I am holding 5 shares of Reliance, it definitely has to be the same value, right? So basically, the value of a share at any given time does not change, but for a stock, it can change, right? I'm sure this is going to sound familiar to you. Bulls and bears, right? What is a bull or what is a bear in the stock market? So bulls are the people who are basically buyers in the market, who are looking to push the market price upwards, whereas the bears, on the other hand, are people who are looking to push the market price down, having a negative conviction towards the market scenario. Simply a metaphor of how the animal attacks its opponent, and it's compared to how a trader attacks the market. So the next set of terms that we're going to be looking at is your positions in the market. So the first one is entry. Entry simply means, as the name states, the action of you entering into a particular trade. The entry can be both buy and sell. If you are entering a trade by buying that particular stock, it means you are taking a long position. Whereas if you are entering into the same trade by selling that particular stock, it is called shorting, or that's a short position. Now you might ask, how can I enter by selling? So that is a whole new concept altogether, which I'll be making a video of later. But for now, let's just stick to the terms, right? So entry can be both long or short. Now, whereas exit, on the other hand, exit can be, it literally means you exiting that particular trade at that particular price point. The reason for exiting can be, it can be any reason, but mostly it is either through stop loss or through target. The next term we're going to be looking at is a pivot point. So the market keeps fluctuating, right? It keeps going up down, and it keeps changing its position. So the price point or the point at which the market changes its direction is called a pivot point. Say for instance, the market keeps going up from 100 rupees to 110 rupees, and from 110 it starts falling and it goes to 95 rupees. So the 110 becomes that price point which acts as a pivotal point. So the direction of the market shifted when it reached 110. And again, if the market keeps going up from 95, then the 95 also becomes a pivot point, right? So basically, pivot point is the point around which the market pivots to change the direction it moves. So the next term that we're going to be looking at is trend. We've all heard this again, and everybody who trades agrees with it. The trend is your friend. This is a very popular quote. So what we mean by trend is when the market moves strongly in a particular direction, either upwards or downwards, it is called to be trending. So if it is trending upwards, it becomes an uptrend. If it's trending downwards, it becomes a downtrend. It's as simple as that. So there are also situations in which the market keeps to be going flat, meaning it definitely fluctuates, but it keeps fluctuating within a certain range, a price range. It neither goes up nor down. So this particular price range or this particular phase in which a stock keeps shuttling between is called the consolidation phase. So consolidation is a situation in the market where the market seems to be stagnated in that particular price range. That's consolidation. Thanks for staying till the end of this video. These are only a few of the terms that are used in the stock market. There are many more, and if you want to learn about the other terminologies that are commonly used, please stay tuned for the next video where I'm going to be explaining about even more fancier terms and breaking it down to make it sound simpler to you. So thank you so much, and if you haven't subscribed to the channel, please do subscribe and click on the bell icon so that you are updated about my next video. I'll see you in the next video. Until then, it's Aravind Srinivasan signing off. Thank you.